Thank you very much for joining us today. Today on our CF Talk, we have Shabnam Mokhtar. She's the Managing Director of Shape Knowledge Services. And she has a very long experience on Islamic finance and a very impressive background. And also is very enjoyable the way that you communicate. So I'm really glad to have you here today with us and to talk about impact investing and Islamic finance, which are two very relevant topics on the current times. So I would like to give you the room to talk a bit about all this ecosystem of the sustainable financing. Tell us, what do you see?
Thank you very much, Jose. Thank you again, IE team. Thank you, Celia, for having me. It's really a pleasure. What I want to do today is actually to share a bit of observation and some of the research that I've done with all of you and exchange ideas. I think that's the main aim. So I'm going to have three main sessions today. First is actually to introduce, as Jose mentioned, the spectrum of sustainable investment, because there are a lot of jargons out there that could mean many different things to different people. So I'm going to select one. I'm going to try to share a bit more from the applied bit or the practitioner's definition, because I think the main meat for the session today is actually the case studies. So start with the introduction, look at drivers, what's driving this, and then go into the case studies. Before I start the case study though, I actually wanna go through very briefly for us to understand the different spectrum of asset classes. Because there's no one way of doing things, there are different ways. We just got to understand what's the risk and return in different asset classes and understand why certain deals are actually in certain spectrum. After the case study section, we'll actually go through into my thoughts on the lessons that we can actually take forward for the Islamic finance market. What I'm going to do is actually blend in cases from traditional impact investing market. I benefited from two main things. One is actually the Oxford Impact Investing Program. It's a fantastic program at SCIEF Business School. If you have the chance, do check it out. And I just completed my fellowship at the Oxford Center for Islamic Studies under the Securities Commission sponsorship. So I'm going to bring in elements from those two exposure and then blend into my observation in the Islamic finance market. So let's start with the introduction and the drivers. I want to start with the sustainable investment spectrum. So traditionally, when we do business, when we do finance, when we do investment, it has always been to think about how do I make profit, right? When we evaluate the performance, it's actually what's my return. It's always the finance bit of it. On the other end, it's actually the philanthropic bit. We want to do good, we want to help others. We don't think about making money, right? This is the traditional way of thinking, the dichotomy. When I do business, I want to make as much profit as I could. When I do good, I'm going to help others. So I'm going to separate this. But I would say for the past 10 years, things has been changing. I'll come to the driver why this is changing. But people now actually want to do, can I do business and do good? Can I do money? Can I make money and do good? You've probably heard of this profit with purpose. That's basically the driver of this movement. So within this middle bit, I like to use annotation. Please bear with me. Within this middle bit is actually that how do I do good and make money? It has a range, as you could see, green bond, green sukuk has different range of green. So that's the thing as well here. So exclusionary strategy is negative screening. So you could have ESG with negative screening, very similar to Islamic finance. We have our negative screens where we actually avoid certain national and compliant activity. So that's to avoid harm. ESG integration is actually about how do I take into account financial factors due to ESG risk and actually take that into account in selecting certain investment. So it's a bit, so if this is negative, this is going to be like a positive integration factor. But when it comes to thematic and impact investing, this is where we are actually deliberately choosing our investment. So I would say thematic and impact align. This is more like I'm going to choose companies that are already doing good. So maybe certain green companies, for example. I have certain themes that I want to focus on, be it renewable energy, be it blue economy. There are certain themes that I'm actually focusing on and finding companies that are already doing good in the sector. Impact investing is, if you've heard of this term, double delta. I want to make financial profit, but I also want to have impact. The impact could be environmental or social impact. The difference though, if I want to call something impact investing, I must measure it. So it must come with proper measurement. So even within impact investing, there are two different strategies. Some focuses on making that financial return first. So I will not forego my financial return. Then I want to have my social or environmental impact. Others don't mind maybe, having a slightly lower return, but making sure you actually achieve that impact. So these are the different types of, investment approach that's actually out there in the market.
That's very interesting. And so please continue. I don't want to interrupt you.
No worries, no worries. I love this definition from World Economic Forum. I think if these are amazing resources that you can actually get, on the definition of impact investing. GIIN is another really amazing resources on the impact investing market as well. So this is what I explained just now. We want to achieve that financial as well as the impact. But the key is actually actively measuring it, right? You can't just call something impact investing without actually measuring what's the impact. So you got to have a measurable impact on the space. Now, why is this growing? For me, there are actually three factors that's actually driving the growth in the impact investing market in the sustainability space. So first is obviously SDG, because that's actually giving goal to, beyond just the financial market, the real sector, into how we can actually do better business, right? Taking into account how we actually impact the stakeholder as well as the environment. Second, and for me personally, I think this is actually the biggest factor. That's demand for it. Investor actually wants this. So I'm going to share a bit of data on that. And then it does not hurt that actually ESG funds, sustainability fund, and impact funds are actually performing as well as the traditional fund, or sometimes even better than the traditional funds. So let's look at the SDG factors. So just a bit of data. If you look at the global GDP, that's about $85 trillion, right? From that amount, what we need to actually sustain nature, if you want to focus on preserving the environment, we only need to spend about 900 billion, which is only about 1% of the GDP. It's not that much money in context, right? Relatively speaking. And the SDG investment needed is only about 6% of the GDP that we can actually generate in the global market. On the right-hand side, if you look at this data, this is a bit, for me, it's actually very, very sad. About 40 trillion. So let's say the GDP is actually at about 80 trillion. Just take a round out number, 80 trillion. Half of this, so about 40 trillion, is actually we depend on nature to generate this GDP. Yet, on an annual basis, we spend 40 trillion destroying the environment. So how long can we sustain this? We cannot sustain this, right? If we spend the same amount to destroy the environment, to generate things that we want to get from the environment, we cannot sustain this for long. So that's why the SDG is actually driving sustainable investment. It's actually driving nature-based solution, because we actually need to think about how we're actually going to live in this world. The biggest factor though for me, if it's just doing good, if it's just talking about the environment, scientists have been talking about this since the 50s, right? Why is it changing now? Because the money is changing, right? If you look at this number, so this was a study done by JP Morgan. In 2017, they actually worked with Rockefeller Foundation. I love Rockefeller Foundation because I think the leadership is fantastic and they've done a lot of amazing things in this space. So when they did the study, these are numbers quoted from their study. About $60 trillion is actually going to exchange hands from the first generation who thought that when I do business, I want to make profit. When I do good, I'll let my wife or my philanthropic activity take care of that. That $60 trillion is actually going to change hands to primarily two groups, women as well as millennia, which they're thinking now is, why do I have to separate this? I want to do business as well as doing good. I actually want to do it together. So whenever there's demand, and it's very, very interesting in the global market though, where you see the demand is actually trickling down. If you go to all these international banks, you go to JP Morgan, you go to BNY Mellon, you go to Barclays, you go to BNP Paribas, it's actually at the private banking arm. All these interesting deals is actually coming from there. Why? Because this is the part of the banking system. Maybe we don't focus too much. Sometimes we look at the investment banking part because that's where all the fancy capital market activities taking place. We look at the commercial banking part, but investment banking, they might be a bit under the radar, but this is where the super wealthy are. This is where the people with money are, and they are demanding for it. So that's why all these international banks are actually providing for the deals. Last but not least, if you look at the performance, just very quickly, I'm not going to go through each number. I want to highlight here. Let's look at this number. So if you look at this, 25 out of 26 funds, so this is obviously the ESG number, is actually outperforming their comparable fund. So even if you want to do good, you're not foregoing return, then the investors are, why not, right? Obviously, there are issues about, greenwashing, impact washing, and other bits, but that's, I think we are at the start of the industry. We need all this improvement for us to improve and move further. So those are the drivers. Let's now jump into the case study bit. I want to go through this. I actually chose this with an example of the halal industry, but I want us to understand the different asset classes, because I think it's a big problem if we want to put all consumer segment or customer segment in just the bank. When we say the bank, normally we're thinking about the commercial bank. It does not work that way, because banks by nature, they are taking the depositors or the investment account holders' money. They have that fiduciary duty in protecting that money. Even the commercial banking regulation is actually very much focused on depositor protection. So there are certain type of deal that commercial banks could not do. Unless they want to provide higher capital, which is not really efficient for them, they will not go into that space. But we shouldn't force all the deals into just the commercial banking segment. We do have other financing tools. So social finance or philanthropy, we can actually use to really help those who are in need, those who are actually below the poverty line, because they are not yet bankable. They can't go to a bank to get funding. It's just not bank worthy yet. So this is an example. This was a forum by IFN. I had the honor to moderate a fantastic group of speakers. Let's look at this. For example, when we are dealing with people below the poverty line, what are the common tools? We usually use zakat, sadaqah, waqf. These are common tools. Although card, that's a small percentage of usage. I think it's slowly increasing. I'm going to share one model where I think we can actually expand the use of card in the market. So money is just one issue for this particular group. Usually what they need is actually a small amount of money, right? For banks, that's why it's not efficient. So usually fintech is a bit more, active in this space. But besides just the money, what they also need, this is in the context of the halal market, for example, how do they actually become the formal player in the halal market? Some data, this is in Malaysia. So there are about 900,000 SMEs in Malaysia, but only 250,000 is actually, and 250 out of that is actually eligible for the halal market. But look at the number, how many is actually certified halal? Only 8,000. That's a very, very small number. So we want to always keep in mind, money does not solve everything. There are other things in business that they need. There's this amazing, I had the opportunity to attend a really good talk about social enterprise 2 years ago in the UK. It was the president from the UK group that actually came. They said, he said, usually bankers think money will solve everything. It does not. For example, these social enterprises, they may not even need money. What they need is actually shelf space in big supermarkets, for example, because when you can actually generate the sale, you can actually manage the cash flow. That's when the finance bit come in. If you cannot even generate the cash flow, forget about taking the financing, right? What can you do with that? So how to become halal participant, how to become bankable. So this is also an important aspect that we actually need to provide the participants here. Once they're slightly bigger, they're not yet bankable, they're a bit more stable, they're in the SME space. This is where you can actually provide micro financing. This is a really interesting example. The two bottom bullet points here are actually example of things that are actually done in Indonesia. In Indonesia, they actually have a Waqf bank. So they have banks in the rural areas that's funded from Waqf. So if you think about when you're funding it from Waqf, the expectation or the cost of fund is actually a lot cheaper than a traditional depositor. Because they have that flexibility, they can actually charge lower profit in their murabaha. And even they don't do branches, they actually work with the tahfiz school, the madrasas in Indonesia, because they have in the thousands, if not million of madrasas in Indonesia. They actually work with the madrasas to actually, allocate the funds and actually monitor the funds as well. So this is where blended finance comes in. If I simplify blended finance, is you don't mind, you have the ability, your sources of fund don't mind giving catalytic capital, i.e. earning below the market return. And then, although I don't have the formal picture here, accelerator, PE, VC plays a really, really important role. Once you're actually bigger, your business actually is viable. This is where PE, VC comes in. An accelerator is just a platform to enhance that activity going on, maybe even connect you to PE and VC. Once you're strong, you're credit worthy, that's when you actually go to the bank. So once you're in the banking sector, to really grow, if you think about this, it's actually about the customer journey. How do you actually, you got to have some people, maybe not all bankers have this thinking. Some bankers do have it, but how do you actually handhold that customer from since they're very, very small to become really, really large? Because otherwise you do not have a strategy for your customer's journey. So once you're able to access the banking finance, you want to then educate them about how do you actually improve the access to global market, because you want them to become the global player. Again, some numbers here. These are data from Malaysia. If you look at the halal exporter in Malaysia, the market size is actually about 10 billion in 2019, and only 17% of that is actually by the SME. Very small, right? We are still very small. So we need to inspire them to think global. That's how you're actually going to grow the market. On the flip side, even the trade finance share of Islamic banks are actually in a single low digit, so less than 10%, right? We're very, very small. We can actually do a lot more in this. And then you have the MNCs. Why am I highlighting this? Because the customer in each silo is very, very different. So you can't use just one strategy for all the different. They actually have cross-border activity. So if you're an Islamic bank, do you actually have the ability to help the customers in different markets? Do you have that connection? So this is why certain Islamic banks, if you look at global trade finance, you look at Sukuk, you'll see again and again HSBC, Standard Chartered. These banks would always come again, because why? They actually have that global network to meet the different client needs. And this is where the capital market activity comes in. You talk about Sukuk, you talk about your share investment. This is where it is relevant. So I want us to keep this in mind, and then later on I'll highlight a really enjoyable book for us to understand further the different asset classes.
Thank you.
All right, let's look at social finance. Before I go to the Islamic side, I actually want to start with this. If you're aware of a baby loan, this is actually, if I'm not mistaken, this is a entity out of France. But they got their inspiration from an entity called Kiva in the US. What they do Qardul Hasan, that's what they do. They actually provide interest-free loan. But it's basically a crowdfunding platform. So they tap the money from individual, people like me and you, because the minimum investment for baby loan, for example, is actually just €10. It's very, very small. But look at their approach. The way I love the way they're telling their story. They're actually marketing it, which I think we can actually learn a lot more in the Islamic space. Because if you just do philanthropy, if I just give the charity, I give sadaqah, I give it away, money's gone. I cannot benefit again from my money, right? So what they're saying is, I want you to give our customers loan, but it's gonna be a perpetual lending. What does that mean? I'm gonna give, for example, the €10 that I gave, I'm gonna be repaid, which I can re-lend again. That's the meaning of perpetual lending. So they are instead of just saying it's actually a charitable activity, look at the way they market it. You can become a philanthropic banker because you are a banker. You are giving an interest-free loan. It could be for a very small amount, but this small amount makes a huge difference in people's life. So they launched in 2008. They raised 7.5 million. That's their capital that they've raised. But because of that philanthropic or perpetual lending that they could re-lend, they've actually to date, this was I think data up to 2019, they've actually re-lent about 25 million euros. So that itself is not just about the tool. I think what we can learn is actually how do we tell the story? How do we actually have a proper marketing to actually attract people and get them on board with the strategy? So the strategy is very simple. The crowdfunding bit is actually with the individuals. This is where you choose the project and you choose the amount that you want to lend. As far as baby loan is concerned, they actually provide gap funding for microfinance institution globally, right? So then the microfinance institution is going to give out the loans to the SMEs. That's how this one works. So this is the background to the two deals that I'm actually going to highlight. There's another deal in Pakistan, Akhwat. You can actually go to the website and to look at the deal, but they're slightly more, maybe a bit more traditional in their approach. I picked up Seed Out in Pakistan, and this was for another research that I was doing. I actually wanted to test the system as a user. So I actually signed up. If I want to get financing for them, what do I have to do? It's really, really simple. So this is where the benefit of fintech actually comes in. You've made the process really, really simple for this group of people. Again, these are not bankable customers yet, but they're making it very simple for you to what is the pre-qualification? It's just to give your full name, your email, your phone number, and you set up your account. That's it. You're pre-qualified. Very easy, right? And then for you and then you complete the application. Very, very simple information. This is all that you need. Really, really simple. And then how does the process work? So this is very, very similar to Kiva. All these models, baby loan, Seed Out, they're actually taking it from Kiva in the US. What they are using, so traditionally, if you go to a bank, they'll use 5 C's, right, to do the credit analysis. Many different things that you look at, but one of the important things is actually to look at collateral as well, because if the deal goes south, they have something to fall back on. What Kiva did, they actually focus on 1 C, because obviously these people may not have the collateral. So how do you evaluate their credit worthiness? How do you evaluate whether or not you're actually going to give loan to these people who are actually asking for it? And this is again interest-free loan. There's no interest charge on the loan. They actually apply something that they call social underwriting. So what is social underwriting? If you look at the process here, once you apply, you're approved. For you to do the crowdfunding, the fundraising on the crowdfunding platform, right? You actually have to do a private crowdfunding. What does that mean? You actually have 15 days in this case to invite from your network, your personal family and friends to actually come and donate. So they actually have a private session for 15 days. Why? Because this is what the social vouching is to vouch for your character. Are you a trustworthy person? Can I actually, they say, I'm not gonna, you actually lend me money, I'm gonna repay you. So can you convince people that you actually have a trustworthy character, that I'm actually willing to depart with my money? So once that's successful, then only you go on to the next stage, that's the public fundraising. I want to share a bit of data from Kiva, because they've done it, for a long time. I think they actually started in the late 90s. So if you look at this, look at the model. Very, very similar to Shisma. What's the name just now? Oh my God. Seed out. Okay, there you go. Private fundraising, 15 days. Because they've done this since 2014, they actually have the data. It's very, very interesting. I've spoken to a number of banks that actually give SME funding. Normally, if you go give SME funding, unfortunately, depending on market, certain market, the default rate could be as high as 98% default rate. But look at Kiva's data. If in the private fundraising period, a borrower is able to invite more than 20 lenders, their repayment rate is 98%, i.e. the default rate is 2%. Take that number, 99%, 98% default rate in a traditional setting versus 2% in this setting. And the data is consistent. And then they've actually added, so these are different types of social underwriters, right? First, they use the private fundraising. They've added trustee. Again, data. I love just because I think data speaks for itself. If they have borrowers who have known their trustee for more than a year, there's actually a higher repayment rate. What I love, another data as well here, when they go to the public fundraising, if they get in the public fundraising space more than 300 lenders, again, the repayment rate is actually 98%. Versus if you only get 30 lenders, the repayment rate falls. So this is basically the power of the crowd. And Kiva actually have that data. So I think we can do a lot more using this style because it is actually a very simple approach, but has been tested. I would highly recommend, maybe banks who are maybe newly going into the space, you can actually do a pilot project in your social finance area. Bank Islam, a bank in Malaysia, this deal actually has won a number of deals, awards because of what they're doing. But because this fund, I had the chance to speak to Bank Islam as well when I was doing this project. They are using their own fund. Unlike Kiva and Baby Loan, he's actually using crowdfunding, right? Bank Islam was actually using its own fund. So this blends in a bit more, it's a bit more similar to a traditional banking approach. If you look at the data, eligibility criteria, you must have a registered business, you must have a positive cash flow. So these are all, sounding very similar to going to a traditional bank. When I spoke to Bank Islam, the reason why they do this is because they actually want to start molding these customers to become their ready customers. So that's why they actually doing the process very, very similar to this. So for them, the microfinance fund was actually first established with their own fund. So there is a credit committee that will actually look at the clients that they're going to be giving the loan to. So again, this is an interest-free loan, but because it's part of the social finance project of the bank. So now you have two models. You want to be a bit more adventurous like the Kiva model, the Baby Loan model, or you want to be a bit more on the conservative side like the Bank Islam model. So depending on your market, you can actually test out the models that's more suitable for you. So that's on the current side. Waqf and zakah. Just due to time, I'm just highlighting a few things, right?
No problem. I'm just listening. I mean, it's very interesting to see all these models that you're sharing and very impressive results. I mean, to see that in the end, you can see this kind of models can be even more reliable than conventional financial ones, right? I mean, like, very
maybe for the amount, right? And then you go to fintech and using machine learning and other bits, you can do underwriting in a totally different way. There's I forgot the name of the institution in Kenya. They actually based on the data on the phone that the borrowers have. If they have a first name and a last name in the contact list, the default rate goes to almost zero. So there are really interesting approach to underwriting that you can actually think. Zakat and Waqf. So I want to highlight an example of a really interesting Waqf deal that I think I want to highlight a few things from here. This was highlighted to me by the CEO of Bank Islam. Back then, he was actually with KPMG on the other side of the deal, doing this deal. Now he's actually with Bank Islam. So the picture is actually showing Bank Islam's headquarters in a really strategic area in Kuala Lumpur. So this land was actually a waqf land provided by one of the individuals in Malaysia, but the original purpose of the waqf was actually to build a mosque. But the land was too small to build a proper mosque, and you're in the center. Would that be actually the best use of the land? So at that time, Bank Islam was looking for a new headquarter. Tabung Haji, which is one of the institutional, the pilgrimage fund in Malaysia, so they are an institutional investor. They are also a shareholder in Bank Islam. They were looking for a investment portfolio as well. So what they did with the land that belongs to the religious authority of Kuala Lumpur, Tabung Haji funded the construction. The cost for the construction was about 150 million. With that, they were able to build a 34-story office building, a modern office building. But they still wanted to meet the original purpose of the person who gave the waqf, right? So they actually built in the basement a really comfortable air condition. If you've been to Malaysia, you know the humidity, you know the heat, you know if your mosque does not have AC, you'll be sweating profusely. So they actually built a really comfortable and suitable prayer hall for the public. With this, Bank Islam signed a 20-year lease. So the IRR for Tabung Haji as the investor was actually 6% for 20 years. So what's the key here? You look at the, it's almost like a Lego piece. You gotta put in the parties correctly. You actually have a really good deal happening. So you have the waqf land holder, the waqf land. You have an investor that's actually willing to invest money. And then the key in cash flow generation is actually the lessee. Because this is a corporate tenant, you actually get a very stable return at a very attractive IRR. I think we've seen similar deals. If I'm what's the name, Zamzam Tower in Mecca, although they did not use a corporate tenant, they actually use time sharing. So there are interesting deals that you can actually do. So the key really, I think, if you want to think about the financial structuring bit, is really to think about who the tenant is, because that's actually going to be generating your cash flow. So that's a tradition. I would say, since the old days, there has been use of waqf in this manner, but the key is actually to finding that tenant. What's more interesting, I think, the development in the waqf space is actually with cash waqf, you're going beyond just the traditional waqf investment, because waqf investment usually is for mosque, is for madrasa, is to help the poor. Those are common things. But if you look at the more modern application, you even have waqf for bringing water to the rural area, right? You don't even have water and electricity in the rural area. So there are different things. You can have modern waqf zakah. That's a zakah institution in one of the states, northern states in Malaysia, in Kedah. The zakat authority in that is actually even going into food security. So they use the zakat money to actually develop large agricultural activities, and actually hiring the people, the poor, to actually give them job using even drone. So modern agricultural technique. So they actually, even if they want to go to other space with the drone skill that they have, they can actually go into other sector. So I think there are interesting things that we can actually do with zakah and waqf as well. This is the book that I wanted to highlight. Adventure Finance. It has nothing to do with Islamic finance, but it's a fantastic book to understand that spectrum of asset classes. Really good examples, all the way from philanthropy to capital market derivatives, really the full spec. And I think in the Islamic space, we actually have more innovation that we can explore into the different variation of the philanthropic tool. Because normally it's the loan, is the grant, is the gift. But this is the summary that I made from here. If you look at the traditional philanthropic space, they actually have different tools. They have recoverable grant, for example. So you start with a grant. If the deal is going good, you transform that into a debt or a loan.
Yes.
On the other hand, you start with the loan because the deal is sounding good, but if it goes sour, you transform that into a grant, right? It's the other way. So really understanding the nature of the people that you're actually trying to help.
Okay.
And the other one, you start with a grant, and the deal is fantastic, almost like a PE, VC style. You convert into an equity. So I think this is where we can actually start. We need the Sharia scholars to come in with the bankers, to come in with people who do deal structuring, to think about different things that we can actually use.
Interesting approach to have this flexibility to change the models as
the
project
customer's situation changes. Exactly.
Yes. Yeah.
Just very quickly on the accelerator program, I'm just highlighting a few examples because the focus could be very different. So Al Baraka in Turkey, they obviously it's a bank related accelerator program. So they are more focused on fintech solutions. I believe this is in their 5th or the 6th year. Fintech solution that they can eventually adopt into the bank for their usage. And you've seen this with a number of banks, I think globally, Islamic banks and conventional banks alike. FIKRA, this is a accelerator program by Securities Commission Malaysia. This was interesting because I think besides just fintech, they are also focused on how do we actually make social finance a lot more innovative and viable, eventually bankable. I think that's actually very, very, very interesting. Foundation, I think foundation plays an immensely important role. I'll highlight when we come to social impact bond later on. This is an example of a foundation in Malaysia. This foundation is actually very, very, the leadership, it always boils down to the leadership. The leadership is actually very, very innovative, very progressive. And they actually even have, for example, in this one was actually a social impact grant that could go up to 250,000 Malaysian ringgit. That's about 80,000-90,000 US dollars. This is very, very interesting crowdfunding because one of the challenges with crowdfunding, I think, just a general observation, not a criticism, is very, very good, but usually the success is really depending on how the crowdfunding platform is actually able to attract investors. In many times, it's not easy to raise the funds. So what IIX did, this is actually based in Singapore, but the founder, you're going to come across this again. I mentioned Rockefeller earlier when they were working with JP Morgan. They're here again. They go into markets where they actually want to open up new market segments. The founder, Dr. Shahnaz, she was in UPenn, a fantastic lady, her background herself, finance background. So what they are doing, they're going to issue what they call Women Livelihood Bond, WLB. So they're going to raise the fund. Instead of going to retail crowdfunding, they're actually going to sophisticated investors. So Rockefeller Foundation is actually one of the investors. Nuveen Asset Management out of the US, they are actually one of the investors because this is where, you know, but you gotta speak their lingo, right? You gotta speak the institutional investors lingo. Once you, and of course, if you see here, there are structuring going on. There are first loss capital actually that's actually needed. I remember, you know, one of the story where for the first deal, it wasn't easy to convince everybody. And you got the buy-in, but I remember she actually had to put in $50 million of her own money as the first loss piece to get the deal going. But once the deal is going, I think now they're actually at their 6th WLB bond. They call this the orange bond. What they have done is really the ecosystem. You're gonna hear this word again and again. Ecosystem is actually that they actually have put in place. Again, I went and I tried as if I want to be the investor, what would be the process? If I want to be the entity that wants to raise the fund, what would be the process? They've really made it simple. So this is really social impact. It's an impact crowdfunding platform because they actually have the tools to measure what's your impact. And that's why if I go back up here, you can actually see for each dollar that you put in, how much is your social return on investment. They've actually really nailed down that measurement process.
Wow.
I'm going to pick up the pace a bit more. Green Sukuk. Why do I think transition finance? Just look at the data. Let's look at green bond. Green bond, the size is about 1 trillion. That's about 1% of the bond market. Sukuk, green Sukuk is actually larger. It's about 5%. Yes, our base is smaller because Sukuk outstanding is only about 200 billion. But the green Sukuk is actually larger compared to the green bond. Even if you look at the data, right? Green bond started in 2007. It took them about 13 years to achieve a cumulative issuance of 1 trillion. Let's look at the Sukuk market. Started in 2017. in just about four years, right? Just in 2020, the cumulative the issuance for that year was to reach $1 trillion.
It's
Why?
huge.
It's huge because most of the issuers that issue sukuk, they are in the transition market. They need to meet that transition space. So people in Middle East, in Indonesia, the government of Malaysia, look at all the Middle East issuers, right? So this is why it's actually driving the size of the green sukuk market. Very interesting, Indonesia's experience. If you look at their journey, look at this. When they started their first 3 issuances on the green sukuk, they were the first sovereign to issue green sukuk in 2018. The tenor was just 5 years, and the green fund investor, so dedicated investor, was about a third. But the latest issuance, look at the tenor. The size is not that big, but look at from 5 years to 30 years. That's huge. And look at the green fund investors, more than half. So, from their experience, the key is if you're the issuer, investors actually want to see your commitment. You're in the market for the long run and you want to do this properly. You're not in it for just the short run. A very quick one, there's green bond or green sukuk and sustainability linked bond. What's the difference? Approach. Green bond, you got to have a clear project. This is what we call use of proceeds approach. You got to have a clear project that you want to use the project for. So here I'm highlighting blue market or the blue bond, but it's very, very similar to the green bond. Whereas sustainability linked bond or sukuk is actually general use of proceeds. You can use it for anything in the business, but you have certain KPIs that you actually have to achieve.
Okay.
Last but not least, on the cases, social impact sukuk, I'm going to look at things that has been done, and then I want to go and see how the traditional market is actually doing it and lessons that we can learn. Khazanah for me is a really, really interesting issuer. They're very, very innovative. They're very consistent in the market. So if you look at this is among the earliest SRI sukuk that has been in the market, 2015, back way before we even started talking about all this green and sustainable investment. Structure for me in the sukuk space, structure is going to be the same. Structure will be wakala. While we look at Chagamas will be murabaha. So the key difference is actually what you use the proceeds for. In this particular deal, because Khazanah actually has investment in certain schools, this is what they call the trust school. So it's actually really to transform the schools in Malaysia. They actually selected, I don't remember, if I'm not mistaken, they started with 25, it's up to 99 schools now, to really transform the schools, especially those in the rural area. This though actually used maybe a innovative structure that was way ahead for the market because they actually used a step down feature. So if the KPIs were met, investors will actually forego certain return or even can forego the capital. So that's what we call step down. I think that was ahead of its time, especially traditional institutional investors are not used to that yet, and it's not the traditional investment style. So that's why I think in more recent days, it's always a step up. If you achieve the KPI, you're gonna get a certain step up, for example. This is Chagamas. So Chagamas is exactly like Fannie Mae and Freddie Mac in Malaysia. They actually buy certain portfolios from the banks so that you pump in liquidity to the banks. The one that actually made the media was actually for affordable housing, because as you could see, this is a segment that normally traditionally banks wouldn't go in. But with Chagamas' support, what do? You actually provide liquidity to the banks. So you actually have two sides. One side, the government is actually providing certain subsidized fund. On the other side, on the capital market side, you actually have an exit. So you have really a rich pool of fund going into the sustainable, affordable housing. I cannot miss out Islamic Development Bank. They've actually done a fantastic job in this space. And if you look at this is very, very similar to Chagamas' framework as well. You will have this, whenever you have green or sustainable finance, you got to have these different pillars to ensure you minimize greenwashing or impact washing. Let me wrap up with the strategy and the opportunities. So here, I'm actually going to highlight certain conventional deals, lessons from the conventional market, because I think we can learn from anybody and everybody if you have open eye and open mind. So this is very interesting. If you look at Hervé, his background, look at his background. He's actually a derivatives trader. He's been doing this for 20 years. But in his life, he felt he lacked purpose, that something is missing. I think a lot of people feel that, right? We've been doing certain work, but we feel something is missing. So when there was a opening for BNP Paribas as the head of CSR, he jumped from derivatives and capital market, from high finance, jumped into CSR. But his aim was actually to transform CSR. I really think this is the low-hanging fruit. A lot of banks, a lot of financial institutions, even corporates, right? We actually have CSR activity, but we may not be strategic in thinking about how we can approach our CSR activities. So what he did, he started in the US. Within in-house for BNP Paribas, he actually launched CSR Business School, 1-month program, only for 160 employees. He said it's going to be very difficult to convert everybody. I'm going to choose certain people who already have the mindset, want to learn, want to explore. Then they'll be the ambassador to convince others. With that, the trickling effect for BNP Paribas has been amazing, right? So this is really a simple thing that we can actually look at and transform. Global impact, right? From the US all the way to Asia, the tropical landscape finance is actually just in Indonesia. Really amazing facility. I want to highlight, this is like a no-brainer for me, but they were so focused. The Japanese, I think that they're very focused when they want to do something. Tokyo Marine, what they did, 1999, they for their CSR activity, they actually asked their staff, what do you want to focus on? For some reason, the staff really like mangrove. Since 1999, they have been doing mangrove plantation in 9 countries in Southeast Asia. Then in early 2009, if I'm not mistaken, it was very, very simple. They changed from paper-based statement. So it's an insurance company, right? They changed from paper-based statement to web-based statement. The saving from that paper-based to web-based, certain portion of it, they really focus on the mangrove activity, what they call the Green Gift Project. The Paris Accord was actually in 2014. It was adopted in 2015. Tokyo Marine, because of their mangrove project that they started, they achieved carbon neutrality. So this data on the right-hand side here, this is actually from their 2020 annual report. They achieved carbon neutrality back in 2013, before even the Paris Accord. Really simple, right? The saving from paper-based to web-based, certain portion of that, but really focused activity. They were able, I think, this almost 12,000 hectares, that's about 3 times the size of Central Park in New York. But they started early, right? But very, very focused and very, very consistent. You can see the impact. So this is an example of a CSR activity that we can actually be very, very. I'm not saying don't do the, the gathering for Ramadan, the helping of the orphanage. Keep on doing that, but also think about something. Pick an SDG that you really want to focus on and have a strategic effort into that. You'll actually really see the fruits. I love Credit Suisse because I love blue economy. Unfortunately, the least invested SDG is actually SDG 14. What I really love about Credit Suisse, they've actually done amazing, deals in the blue economy. Again, Rockefeller. This is the 3rd time Rockefeller coming out, right? So Rockefeller Asset Management has been focused in the blue economy for a long time. So what Credit Suisse wanted to do, they know for their investors, again, they spoke to their investors. They know the millennia in their investor group are really, they love the ocean. But how do they structure a deal that can actually be very attractive to retail investors? So they were working with Rockefeller, but if you look at this, there's the Ocean Foundation, which is the expert in blue economy. They know what are the business activities that's actually causing harm to the ocean. So you have to collaborate with experts, because we as the financial institution, we may not know all the environmental issue, but you can identify partners who are really experts in this. What they did, they actually structured, the strategy is very simple. With the experts' help, they identify public listed companies that are doing good. So they have different categories here. They buy these shares of these public listed companies and they use shareholder activism, because now you have the shares, you actually use your shareholder voice to actually encourage change, further change, as well as input from the Ocean Foundation on how you can actually change your business to do better for the ocean. With this, The unit trust that they sold was only $100 per share, per unit. They were able to raise $220 million in just 10 days. So absolutely doable, amazing deals if you collaborate with the right partners. Last but not least, this is a slightly different variation of the social impact bond that I highlighted earlier. If you look at this, so UBS, there's actually two arms that's actually playing a deal here. So UBS Foundation is managing it, but the money that UBS Foundation is actually managing is actually coming from UBS Asset Management and the private banking arm. Remember the wealthy individuals? So they want to do good. So this was actually for girls' education in India. That money was actually used, was provided to a selected social enterprise in India. But you have two other players here. The first player is actually the performance manager. They'll be working with the implementing partner to really make sure you are achieving the targets. But then you actually have an outcome evaluator who's going to audit that the impact actually has been achieved. Once the impact actually has been achieved, you actually have another foundation. This is why I say foundation is actually really, really important in the impact investment space. So this foundation is, traditionally is big into education business anyway, education funding. But with this, now they're saying, I am only going to pay this outcome if the impact is verified. So I know my money is doing good, confirmed, it's verified, right? So now with that structure, the original investors were able to earn, look at this number, 15% IRR. So you can make money and do good. You just need to, learn from the structure that has been successful, find the right partners, and you can absolutely do this.
That's very interesting examples and very impressive return for. I think it's key what you were saying that like CSR shouldn't be like an isolated part of the philanthropic arm of corporations, but aligning it with the strategy can really change the way that we see it as and it can be business and it can be doing good at the same time. I think that's an important mind shift that we need to do in corporations these days. And
absolutely.
Yeah.
Absolutely. And with that, I wrap up my presentation. Sorry, it took a bit longer because it was just
no problem.
So many things that I wanted to highlight.
It was very, very interesting. Thank you so much. I don't know if we have any question. We are a bit short of time, but I will just give a minute if any of the attendees want to ask something. And in the meantime, I want to thank you. It's really, it's very, very interesting and enlightening to see. Yes, we're saying this shift on the way that we have to see doing good and doing money can be something that can be done together, right? And actually,
can be done together, absolutely.
And actually, sustainability is a very important part of philanthropy because one thing cannot do with the other. We cannot depend on grants and forever. It's important to rely on ourselves and create a model that can work by itself.
Absolutely, absolutely true.
Well, thank you very much, Shabnam, and thank you, everyone. We received a few messages of people that couldn't log in, but we will share the recording with everyone, and it's going to be on our channel. So, yeah, looking forward to our next occasion to talk. Thank you very much.
Thank you very much. Have a wonderful day, everybody. I hope it gives some inspiration for us to do good and make money.
Thank
All
you.
right. Bye-bye. Have a wonderful day.
Bye.